The Morgan Report with David Morgan.
And David Morgan of themorganreport.com for the week ending 2 December 2022. Well, where did the year go? So first up, this is an article from Aaron Katusa. Known Marin for a long time. He worked with Doug Casey for several years, wrote their energy report. Smart guy, well-traveled, lives in Vancouver as far as I know, still does. And he wrote a very good article here. I'm not going to read the whole thing, but I would suggest anyone in the precious metals should read this article. In fact, study it. Is the ultimate precious metals bottom, and is this the ultimate precious metals bottom indicator? What he's talking about here is what the central bank gold demand has been. And what's interesting on this graph, as he points out right at the start, I would have bolded it, but I didn't write the article. This does not include reported purchases from large gold buyers, Russia and China. So if you factor those in mentally, it's even better than it looks on this graph. Talks about the strong dollar, and then he goes in and looks at where gold's total returns are. And as you can see, gold has lost less than almost everything else, and the positive is a broad-based basket of commodities. Of course, we know what oil and natural gas have done, which is in that basket. Year-to-date gold performance in different currencies. Again, we've emphasized this, but it's nice to see it graphically. If you look at gold's performance year-to-date, it's up slightly in the Canadian dollar, 5% in the Australian dollar, and the yuan up 8%, in the euro 7%, and in the yen 20%. So it's down 7%, as stated earlier, in US dollars. It's up in almost every other currency. Precious metals sector cash percentage of market capitalization. This is comparing it to the the total North American listed markets. So it's at about 12.5%. It's on the upswing since the illness situation down in this time frame. And here's one that's very interesting. Gold producers' price to cash flow estimates 1 year forward. He shows this and he notes that you can see the sample is now trading below its 10-year average, and talks about, really, is it going to get much worse? Is this the bottom? He's asking that question. And then he talks about one of the key drivers is revised cash flow forecast because of higher operational costs. And we've addressed this in the Morgan Report 2 times. One as the complete editorial a few months back, and then we revisited it, I think, last month. And there are ways to invest that are superior to just miners, and we have advocated that for years. But we do evaluate on a mine-by-mine basis, just the same as Katusa research. So is it ready to jump on the best companies? Central banks are buying. The precious metals companies' valuations are multi-year lows, and corporate cash levels are at multi-year highs. All the indicators are signaling a warning that we're getting to the good part. You might consider it a pitch for his newsletter. I do get it, and I will say it's one of the better ones, definitely. I'll leave it at that and move on to the next. So Nikkei Asia, China thought to be stockpiling gold to cut greenback dependence. Well, the headline basically says it all. As in the previous article where Marin left out Russia and China, they've been accumulating precious metals for quite some time. And that's basically all this article really says. Chinese imports from gold from Russia surged in July, soaring to more than 8-fold on the month and roughly 50 times the year earlier levels, according to Chinese customs authorities. So there also is getting it from Russia. From the Economic Times, an article on the 27th of November about silver. Signs of a swift recovery in demand. Is it the right time to buy silver? Talks about silver prices recuperating from multi-year lows, on year-end low on demand optimism. Global consumption of precious metals is expected to reach a record total this year, driven by post-pandemic industrial and physical investment demand. Silver is reeling under the bearish grip for the past several weeks. Yada, yada, yada. Silver is an integral part of many green technologies. We go into that. I'm publishing the Morgan Report this weekend. It's always due the first Monday of every month. Today's the 2nd. 3rd, 4th is the weekend. On the 5th, which is Monday, you will have the Morgan Report. We usually post it on the weekend so you can read it before the markets open. And we really nailed it on the green technologies and what it really means. And it was a fair amount of research that we dug into and got the numbers out. But something that any serious metals investor, base metals, precious metals, battery metal, alternative energy, sustainable development, any of those EVs really should have a look at the numbers, and we provide them in the December issue of the report. So I digress to come back. Meantime, the ETF demand continues to be on the lower side. Institutional investors refrained from the metal due to high volatility and an opportunity in other asset classes. I'll say ho-hum. Is that true? Probably, but real estate's failing, the stocks are failing, the bonds are failing. Where are you going to go? Call Ghostbusters. It's going to go to gold. And there'll be other asset classes, of course, but there'll be a run to gold. As I've said previously, I think it's already started. It's just rather stealthily taking place unless you're very observant and can watch the gold flows. You're really unaware of what's happening, let's say, underneath the cover. I think I showed this last week. We've all seen it. If you're involved in silver at any more than a cursory level, silver heads for the biggest deficit in decades, according to the Silver Institute. And again, it's from Reuters. Global demand for silver is expected to rise 16% this year to 1.2 billion ounces. So basically, the net equilibrium point is roughly a billion ounces. 850 is mined, 150 is recycled every year. Those two numbers add to 1 billion. And this article states, Reuters, that this is going to be 200 million ounces above and beyond that. So that is significant. In fact, to the best of my memory, that is the biggest annual deficit that I can recall from 1990 onward. You could argue very much that the ETFs, the silver ETFs, are kind of the swing trades when the ETFs are massively accumulating physical silver. You're going to see an increase in price. And when the ETFs are offing silver, selling it, and put it back on the vaults, then you see the price go down. You can even make, I think, a stronger argument for India. The reason 2020's prices did what they did and didn't go higher was because the rupee price of silver was on an all-time high and COVID hit. And so the Indian population that saves in silver, doesn't trust their government's currency, basically let it go to get the currency so they could do what they needed to do under the COVID situation. So a lot of that metal flowed out. Very little flowed in. Now the opposite's happening. Demand surges in India this year, proves catalyst for global growth. Wide array of demands, including industrial jewelry and silverware, physical demand, have led to a forecasted global silver demand of 1.2 billion ounces. We just said from the Silver Institute, global demand for jewelry is expected to increase 29%. Demand for silverware expected to increase 72% this calendar year. I think they're referring to India, where there's much more demand for silver in jewelry form than any other country. And surprisingly to me, and this is stated as silverware, I'll take them at their word. I really don't know. But lots of silver moving into India this year. I would say, I'm not going to play this video. I don't want a copyright strike from the powers that be. However, I would have you look it up on Bloomberg. This is a interview with Robert Friedland. If you're into mining, you know who Robert Friedland is. And he, as owning Ivanhoe, or principal shareholder, talks about a long-term shortage of critical metals. I would just want to add to that and reemphasize that this month's report in December, we go into that with the numbers, and they are astounding as far as what the potential shortage is via the proposed green movement. In other words, if we were to go all sustainable development with solar, wind, uranium, alternatives, how much metal would we need to do that? We asked that question and we have the answers. And shortage is probably not the correct word. Impossible is probably. Now, this is a study. It was actually a 2-year study. We took the high points out of it and reported it for our members. But something, again, that if you're involved in the either side of the equation and you want to know what the outlook looks like based on the scenario of we are really going to be pushed into this alternative energy camp and forget fossil fuels, or something more modest than that, which is where I'm at. Nevertheless, take a look at how much of these materials are needed to go fully green is astounding. This is by far one of the most interesting articles I've posted probably all year. So I've said in the past, I did make a platinum purchase at the 850 level. And it's now about 1,000, so it's looking good so far. This is a platinum company that has wind power as well as solar and smelterless technology. Fascinating. This is from the Creamer Media's Mining Weekly. I think you can find it. Johannesburg, the latest news. This company in Johannesburg will not only have abundant solar power on site, but the world's first smelterless processing technology that consumes 82%, yes, 82% less electricity than conventional platinum group metal smelters, but will also be powered by wind energy. So fascinating. And as almost all of you know that followed me for very long, we are involved with the smelterless process using chemistry to extract almost any metal you would care to name. So the company's also signed agreements for a significant portion of new Omande's graphite anode material out of its fully integrated one anode facility. Partnership with Panasonic and Mitsui are expected to firm up Nouveau Monde's opportunity to benefit from North American legislation that supports locally produced batteries. So something definitely look at, especially if you're looking at the leading edge in the mining sector. This is an interesting place to look. And I'm doing this at the end of the video, so you don't have to watch it, but this is a Black Friday special that we're running from Black Friday last week to the end of the year. And we're giving a pretty big discount and a 15-minute consultation with yours truly. It won't be one of the staff, it will be me. And once you sign up, you will get a calendar sent to you, and you can just pick a day and a time that works for you, and we'll be scheduled for 15 minutes. The code, of course, is this Wealth 2022 when you join the report. And putting this out to our mailing list, we'll probably post it a few times on LinkedIn and Twitter and other places. If you just want to jump in and get the details, you can call the office. We're not hard to find. Just go to themorganreport.com. Look at the Contact Us button and say you want the special offer that expires at the end of 2022. So that's it for this week. This is the Weekly Perspective with David Morgan. I will be back with you next week.